Okay, good evening, everyone. Welcome to our webinar on investing in Canary Wharf and the Wardian by Equal World and Ballamore. My name is Edith from benhams&reeves, Hong Kong. I'll be your host this evening. Our webinar will be broken down into three parts. So firstly, I'll be joined by our director, Mark von Grunder in the UK. He will be providing us with a UK market update, following which I'll be introducing the spectacular development, Wardian, along with an update on Canary Wharf. Finally, we have the pleasure of inviting Marianne from Capricorn Finance, who has worked with benhams&reeves and Ballamore for a number of years, assisting clients on financing, and is very familiar with Wardian. He shall be sharing some outline of mortgages and refinance options with us all. And then lastly, we'll finish off with a brief Q&A session. Can I take this opportunity just to remind everyone, any of your questions, please do use the Q&A function rather than the chat function. Thank you.
Segment 1, marketing.
Next slide, please. Okay, I would like to just start off by introducing our company, benhams&reeves. We've been established for over 60 years, and in Hong Kong, we've actually had presence for over 20 years. We have 19 branches across the whole of London and 8 international offices currently. And we also manage over 3,000 properties. So what we can provide for clients is a one-stop service, right from the beginning, providing investment advice, facilitating the handover and snagging of new builds, preparation of the property for marketing and sourcing of tenants. Once the tenant is in situ, we also provide the management service of the property. And by the tax year end, we also provide tax return services to our clients. And then finally, the resale of the property further down the line. Now, we also have our sister company, Install, who will be able to assist on furnishing needs as well. Next slide, please. Okay, so at this point, I would like to hand over to Mark, who shall share with you why London is still a bulletproof investment and why time and time again, it's still one of the top destinations for investors all over the world. Thank you, Mark.
Thanks very much, Edith. Good evening, everybody. As Edith said, my name's Mark von Grunder. I'm a director of benhams&reeves, and I'm based in London on a lovely grey day. But let me be honest, there's no doubt that we're living in unprecedented times at the moment. Investors from around the world, including Hong Kong, are desperate to find a safe place for their money. And one of the key places is property. You know, property has historically been and continues to be a more rewarding investment than the typical alternatives. It's a tangible investment, something you can touch. And people are always going to need a home. On top of that, London has always been a safe port in the storm. Historically, whenever there's been a global crisis, people have literally flocked to London. And today, they continue to come here, you know, because investing in London is an option open to everyone the world over. So the key question is, why London? Well, for me, the answer is quite obvious. London has long been a sanctuary, like I said. It's survived recessions, terrorism, the financial crisis, and it's now survived the pandemic. We are literally back to normal in London with no restrictions at all. We've got a powerful media, business, and cultural hub with a skilled and dynamic workforce. Arguably, London is the world's strongest financial services sector, and it's a key global centre for education. And then UK law is known throughout the world for its openness, transparency, and fairness. London also has a time zone advantage to work with investors both in the East as well as in the West. You know, this cosmopolitan global city remains in the top places in the world to do business. You know, if you pause for a minute and look at the long-term picture, according to the ONS, the Office for National Statistics, the average London house price in 1991 was just over £70,000. And if you look at 3 decades, what's happened over the last 3 decades, At the end of 2021, the average price was almost £520,000. That's an 86% increase in 10 years. That's 298% over 20 years and an eye-watering 600% over the last 30 years. You know, the figures tell a story here. Even in the most politically and economically difficult of times, London property remains a valued and appreciating investment. London's an extremely resilient city too, and no more so than now. London property market is underpinned by strong fundamentals. You know, I always personally refer to London property as a bulletproof investment. It's been long considered one of the world's most trusted assets, with its ability to deliver a regular income and its long-term capital growth, especially during times of wider uncertainty. UK house prices rose at a faster rate last year in 2021 than in any calendar year since 2004. In fact, according to Halifax, one of the UK's largest banks, 2 years on from the start of the pandemic, average property values have now risen by over £38,700, which is 16% since February 2020. Over the last 12 months alone, house prices have gained on average over £27,000. That's the biggest one-year cash rise recorded in over 39 years of the index history. So for Hong Kong residents, London creates an opportunity to invest away from your local market. And any banker will tell you diversification is a cornerstone of any good investment portfolio. The cost of borrowing, which I know we're going to talk about later, is still at an all-time low. The Bank of England rate is still only 0.75%. Even a marginal increase is unlikely to dent the appetite for home ownership. And with cash actually losing value in real terms when you take inflation into account, in my opinion, there's only one place for it, and that is London property. But it's still very important to target your investment. Aside from the key ones of price and location, you need to consider yields, potential for capital growth. Is it a regeneration area? And very importantly, the reputation and track record of the developer. You know, our role as a company, as Edith said, is we've been around a long time, but we're here to help our clients, and that includes you, to make the most money possible by maximizing the return on your investment, which includes saving your valuable time. Buying a London property can be the opportunity of a lifetime. The keys are clear thinking, meticulous planning, on-the-ground knowledge, and a trusted independent partner, which is where we come in. Having someone independent you can trust and rely on, someone who's going to be there and hold your hand, guide you through the process, avoiding the pitfalls along the way. It's absolutely crucial to be ready. And by that, I mean having everything in place so that the moment you come across a property that you want or the right opportunity, you can jump on it. That not only means working out your budget, which is important, but also ensuring that your finances are sorted out nice and early. And if you're going to get a loan, to get a loan arranged in principle as soon as you can. And please remember that you buy a property with two goals in mind: capital appreciation on the one hand, and generally speaking, London is a medium to long-term investment. A flipping strategy, you know, where you buy and sell straight after completion for a short gain, is very dangerous. And I therefore always recommend a long-term view. And don't forget, the other goal is rental yield, rental income. With 1/3, that's 1 in 3 London households today are currently renting. And by 2025, that is forecast to jump to 60%. 6 out of 10 London households will be renting. So the supply of rental stock is going to be unable to keep up with that demand. So now turning to the all-important question, where and what to buy. You know, take a look at this map. There are 32 London boroughs. People don't realize how diverse London is. And this is where local knowledge is very important. In fact, this map shows you the price growth in different boroughs over the last 20 years. You know, as you can see, house prices in Tower Hamlets, the borough in which Canary Wharf is located, have risen by almost 300% over the last 20 years, 292% to be exact. And although every investor has different requirements, it's our job to help you find a property that, frankly, I'd invest in myself. You know, we're there from the start all the way through to the finish when you've made your profit and you exit. And once you find a property you want to buy, we can help you furnish it, market it, negotiate with tenants and manage it into the future. It's a complete one-stop service, which is what Edith said at the beginning. And I'm now going to hand over to my colleagues who'll tell you more about the property trends in Canary Wharf. Thank you very much. Edith?
Thank you for that, Mark. Okay. Okay, so in the next few slides, what I'd like to do is just spend a little more time on Canary Wharf itself, given that's where Woodian is. Next slide, please. So Canary Wharf, as you may know it, is located in East London on the Isle of Dogs. It's part of the borough of Tower Hamlets. And you may know it as the financial centre for London. And also it's known for its tallest building, so One Canada Square, which stands at 235 metres tall. Now that tower actually held the record for being the tallest structure in the UK from 1990 until it was surpassed by the Shard in 2010. The Canary Wharf itself is a buzzing business and residential district, as you will see later on throughout this presentation. It has a working population of over 120,000 people. And however, this is predicted to grow to about 215,000 by 2031. So that's an impressive 79% growth. Okay, next slide, please. So the site where Canary Wharf currently sits was formerly the busiest shipping port on the globe. So this dates as far back as the 1802. It was the mainstay of the British Empire. So it imported goods from all over the world. And actually its name Canary was derived from the fact that many goods were actually imported from the Canary Islands. Now, however, the dock began to decline around the 1950s. So it led to its closure in 1980. So this gave way to a huge government-backed redevelopment of the whole area itself, and it was granted a status as an enterprise zone in 1983. Next slide, please. So just looking at the average price now at Canary Wharf itself, it's just under the £553,000 mark, and an average rent of about £676 per week. The population of cities such as London is actually projected to grow significantly by 2040. And the Greater London Authority actually forecast that with this level of growth, London actually requires around 66,000 new homes to be built per year. And just to give you an idea, in 2019, this figure was actually only 25,000 new homes. So as you can see, there's a massive supply and demand imbalance. And what this means is a massive drive for capital and rental growth in the area. Okay. Next slide, please. So the regeneration, the Crossrail, and also property demand are direct factors in contributing to this strong capital growth in Canary Wharf. And Knight Frank's April 2015 figures from their spring residential report actually highlighted a 9.2% house price growth in Canary Wharf over the previous 12 months period. Now, this exceeded the average London figures of 2.8% in prime central London. So prime central London, meaning the neighbourhood surrounding the Hyde Park area, from Fitzrovia to Holland Park, West Kensington. And it also exceeded the prime outer London, which were performing at 4.5%. So these areas will include areas such as Battersea, Chiswick, Clapham, Fulham, Wapping. Now, according to JLL, with the arrival of the Crossrail, it is also anticipated that another 44% growth will happen. Okay, next slide, please. So this estimated forecast growth for 2023 over a 5-year period, as you can see here on the screen. So this is taking into account a £1 million property that has been bought in 2019. So the predicted house growth, so the capital appreciation, is in the range of about 10 to 17%, whereas the rental growth is about 8 to 10%. So that's great performance. Next slide, please. To give you a little more of an idea on Canary Wharf itself, currently there are over 100,000 employees and executives in the Canary Wharf area. Therefore, there's huge potential for corporate rental catchments. So from experience, we have many corporate tenants renting in that area. And corporate tenants tend to be very stable tenants. They pay very good rent. They keep the apartments in immaculate conditions. And traditionally, we have, as also the commercial expansion continues. Actually, this is interestingly led by interest in the tech industry. The employment forecast actually is looking to double to 200,000 over the next decade. So what we're really seeing happening in Canary Wharf is an evolution into this center of commerce, expanding into various industries. So just to give you an idea, currently businesses that run in the Canary Wharf area includes businesses such as Deliveroo, Societe Generale, Volcana, Energy Saving Trust, the British American Tobacco Company, and also the Government Property Agency. Impressively, the district itself is the biggest employer for bankers in Europe and also London's highest salary postcode. So this means the average salary is typically around £100,000 per annum. So for investors, this is great. You're talking about a really good caliber of tenants with great affordability. Okay, next slide, please. Okay, the much anticipated Crossrail is set to open this summer. The project was first approved in 2007 and it will be operated by TfL, so Transport for London. Just a little bit more information on Crossrail if you don't already know. On the western side of the Crossrail, one arm branches out to Heathrow Terminal 5, whereas the other runs to Reading. And on the eastern side, it splits when it hits Whitechapel. And one branch then goes towards Abbey Wood in the southeast of London. And then the other branch will go to Shenfield towards Essex. So when this fully opens, the Crossrail, also known as the Elizabeth Line, will actually add a 10% capacity to the central London network. So what this translates to is an additional 1.5 million people to within 45 minutes of central London. So as you can see, this is a key driver for London's economic growth. It improves the transport link, it's driving house building, and also supporting a wider regeneration opportunities, because now we're making the commutes to these outer zones more accessible. So then it means it opens up a lot more opportunities across London. So this is actually an estimated £42 billion to the economy of the UK. And Canary Wharf actually will be one of the largest Crossrail stations. And according to JLL, the house price growth was actually more than 40% in the period between 2014 and 2020. Okay, next slide, please. So as mentioned before, Canary Wharf is no longer is moving away from this financial hub status to a more lifestyle choice. There's an abundance of activities and events that happen now in the area. So for example, things such as lunch markets, which is a weekly run street food market, it happens. And then they have the monthly night markets with music and nighttime mini golf. They also have ping pong competitions. They also have the outdoor summer screen, so where people can gather and watch events such as Wimbledon, championships, and also championships and F1. And also my favorite, dragon boating on the South Dock. Also something very unique to Canary Wharf is the 3x3 basketball court. Okay, next slide, please. So traditionally, people may know Canary Wharf as this concrete jungle. However, there's been great efforts to create this balance between lifestyle and working. So there's, as you can see, been a creation of many, many outdoor parks and spaces for you to enjoy. Okay, next slide, please. So again, this slide is really to emphasize how well connected Canary Wharf is. It is accessible by 3 tube stations and then the Crossrail, as well as river buses. Okay, next slide. So here, in terms of time, it's 11 minutes to Stratford, another massive interchange. 30 minutes to Bond Street and only under 40 minutes to Heathrow. Now, this is actually a lifesaver if you've ever tried lugging heavy luggage and bags from the east side to Heathrow Airport. Now, all you have to do is get on one train and under 40 minutes, you're there. Okay, next slide, please. Again, another indication of how well connected Canary Wharf is. You can see within good proximity all London's airport from Canary Wharf. Okay, next slide. And what I really want to get to now is the exciting development Wardian by Equal World and Ballamore. Next slide, please. Wardian is actually made up of 2 towers. The West Tower stands at 47 floors and the East Tower stands at 54 floors. And you can see that closest to us is the East Tower in this image. So just want to emphasize all the images that we're about to show you now of Wardian and its facilities, they are all real pictures because it's all fully completed now. So this will give you a real sense of the quality that Wardian is at. Next slide, please. Okay, so as you can see here, Wardian will be very attractive to families and for reasons that it's close proximity to top education. So you can see here from nurseries to high education, there's an impressive 201 Ofsted rated good and outstanding education institutions, all within 3 miles of Wardian. Okay, next, please. Here, we're looking at the front of the development. So as you can see, the East Tower sits on the right and the West Tower on the left. Okay, next slide. So this overview plan, what's really good about this overview plan is it really shows us its proximity to all those stations that we talked about and also the pier where the river bus is. Sorry, Wardian here is on just the bottom of the screen there, the 2 brown blocks. So you got the West and the East Tower. So 6 minutes walk from Wardian will take you across the footbridge. You can see just going very thin footbridge across the dock there towards Canary Wharf Station. And there's also a 6 minutes walk towards South Quay GLR, which is on the bottom right of our screen there. And then 4 minutes again across the dock will be the Heron Quay DLR. And then beyond that, an 11 minutes walk, just above KPMG will be the new Crossrail station. And then on our left, lastly, it will be the Canary Wharf Pier. That will take about 12 minutes walk from Wardian itself. Okay, next slide, please. Okay, so this image, what it's showing you here is the footbridge that is second, so for the further away one is the footbridge that you would take to go back across towards Canary Wharf Station. You can see here it's literally a very short walk away from Wardian. Okay, next slide. So here again is the front of the development. This is the entrance into Wardian at ground level. Sitting on the left side is your West Tower, and then on the right side is your East Tower. Okay, so in the next next slide, I would really like to show you the interior, the finishing of Wardian itself. Okay, next slide, please. Okay. So from here, we can see the beautifully designed, botanical themed lobby with really impressive floor to ceiling height, as you can see there. Okay, next. Next, we have the 25-meter heated pool. So enjoy a swim after a long day at work to relax. This is an open air pool. Okay, next slide. So the next slide also is just another image of the pool. Okay, next. Okay, here. This is the spa. So again, all real images. You can see that the whole botanical theme just runs throughout the development. So it's almost, you forget that you're in this concrete jungle in Canary Wharf when you're surrounded by all these lush greenery. Okay, next. This is actually one of my favorites. This is the screening lounge. You can see it's beautifully designed. So there you can enjoy a drink before going into your own private cinema. And then the next slide will show you the interior of the screening room. Again, finished to a very, very high standard, very luxury. Okay, next. So you can book your own private dining and drinks at the Sky Lounge. So the Sky Lounge is located on the 53rd floor in the East Tower. And from here, you can really enjoy that panoramic view of London. It's an amazing view. This is, as I said, real images. If you just stand there, this is really what you'd be looking at. Okay, next slide. Okay, again, just to go for other amenities, which includes the gym and the treatment room. So fitness and wellness really goes hand in hand at Wardian. Okay, next. So Wardian offers is modern living to the highest specification, as I mentioned. And here you can see a real example of a finished studio. So this is the bathroom and the living space. Very clean, modern design. Okay, next. There's a further example of a 2-bed apartment. So currently, the highest 2-bed apartment that's available sits on the 47th floor. Okay, next. Again, just more examples, what we really want to share with you, because it's already a completed development of real pictures and finish and views of units in the Wardian. Okay, next, please. Okay, this is the amazing penthouse. So we currently have 4 2-bed penthouses left on the 48th floor. The internal square footage is just over 1,260 square foot, plus an external space of just under 300 square foot. Okay, next, please. Okay, so this is the west aspect from Wardian, looking towards central London. As you can see, very far there, very small is the Shard. Amazing, amazing sunset view. Okay, next slide. Okay, again, this is, as we said before, you can see a little more clear now of the Shard. Okay, next slide, please. Okay, this is the east aspect towards North Greenwich and the O2. So imagine standing at your balcony, you know, sipping your champagne after a long day's work. It's this breathtaking view. Okay, next slide. Okay, so just to finish off, what I'd like to share with you is a finished and fully furnished 2-bed apartment in the West Tower. And obviously, just to summarize, as you could probably make out, Wardian is a representation of just top quality and lifestyle, and at the doorstep of one of the top financial hubs in Europe, and with really just unmatched connectivity across London. Okay, we can play the video, please. Thank you. Okay, so now what I'd like to do is pass the time over to Marion from Capricorn Finance, and he would share with you the various finance options, mortgages and refinance. Thank you, Marion.
Hello, I hope you can all hear me. Good evening to everyone. My name is Marion Jenkov from Capricorn Financial. I am heading the Hong Kong office for Capricorn, and we've been working alongside Benhams&Reeves and Ballymore for a number of years now. I have actually previously done quite a few mortgages on the Wardian scheme, all without any issues, and it has been a good experience so far. Properties completed and ready, and what I'm going to speak to you about is the mortgage options available, the UK market, and of course, I'm going to talk to you about, tell you a bit more about our company as well. So moving on, it's not letting me go next. Oh, there we go. Fine. Just a little bit about us, Capricorn Financial. We were set up in 2005, and we've always been based in London up until recently when we opened up our Singapore and Hong Kong offices. We are now the largest independent mortgage brokerage based in London. We have another 15 people based in the Singapore and Hong Kong office altogether. We've got 3 separate specialist financing teams, one being Capricorn International, and we deal with overseas nationals such as clients based in Hong Kong, Singapore, Southeast Asia, all over the world. Also, we have the private clients team, which deals with high net worth individuals and the private lenders. And we've got the commercial team, which deals with any kind of commercial deals, more complicated buy-to-let structures. And we are a whole of market mortgage brokerage. What that means is we've got access to all the lenders that lend to UK properties. So there's more than 150 of those. And you'd be glad to hear we are FCA regulated. So all our advice is actually thoroughly checked and regulated by the Financial Conduct Authority. And now just the product wheel. This is just a simple, colorful kind of image of what the logos and the lenders that we work with. You can probably see at the bottom left some familiar faces, the likes of Bank of China, HSBC, UOB, of course. There's a lot more to them. Top right is the private lenders, of course. Each case is different. So my job really is to speak to you, see what's the best option for you on the whole of the market and advise on the best deal for you. Of course, we then take care from start to finish. Now, if I was to talk to you a little bit about a market summary. So what's happening in the mortgage market in the UK at the moment? Most important thing when looking to get a mortgage in the UK is to not compare it to Hong Kong. I appreciate some of you would have gone through the mortgage process in Hong Kong and have some sort of expectations, but we're talking about a completely different jurisdiction and different regulations. So it's very likely that all the aspects and the criteria and regulation will be different, and it is different in the UK. Now, I don't know if you've heard, but the interest rates in the UK have recently gone up to 0.75. That's the Bank of England base rate. Of course, this was an all-time low up until since kind of the Brexit times and COVID times, and it's slightly going back to normal and going back up. Now, people are saying, and the notion is that more increases are to come. Of course, that basically means that most people, if you're looking to get a mortgage and secure a mortgage, you should start the process ASAP, because then that's how you secure the lower rates and you hedge against any sort of rate increases. Current lender appetite, what that means is the willingness for lenders to lend, really. And of course, that's been, that shifts depending on political situations. But in London, as Mark mentioned, it's kind of a bulletproof investment. In London, you're always having basically all the lenders willing to lend, especially postcodes like E14, where Wardian is, and Canary Wharf, being one of the most affluent areas. You're having no trouble in terms of lender choice. Also, the property values are a bit higher there, which is normal. And the higher the loan is, the more options there are, because lenders like the higher loans. Now, of course, there's always new lenders entering the market. There's always kind of a new criteria or new bit of product coming into the market, which is where we come in handy for you to review your options and tell you which lender is out there. Because truth be told, you as a client cannot enter 150 banks and ask them for a mortgage, but we can. And given the size of Capricorn Financial at the moment, we have about 65 brokers altogether and another about 60 people supporting staff. We are actually the largest introducer of business to a lot of the banks. So we have exclusive products with quite significant number of the lenders we work with, meaning we either get a cheaper rate or sometimes lower fees on the arrangement fee from the bank. Of course, that all depends on your situation. Going next, lending policy. Of course, that is completely dependent on your situation, but I've just outlined a few things that banks are looking at in terms of criteria in individual lending policy. So A, being income requirements. There is always some sort of an income requirement from a bank. Sometimes that's zero, sometimes it's £50,000. And of course, once I review your option, once I review your situation, I can tell you what option is available to you. Now, of course, then we move on to the rates. Now, the rates are dependent on the loan to value. If you're looking to put down more deposit, you're likely to get cheaper rates. The minimum deposit in the UK is 25%. So 25% down payment and 75% borrowing is the absolute max you can do. If you can provide more deposit, then great. Now, moving on, remortgaging. That's a concept that's not very popular in Hong Kong, because when most people get their first mortgage from, let's say, Bank of China, they tend to stick with them for the life of the mortgage. In the UK, that's not the case. In the UK, people remortgage every 3 to 5 years to get a better rate or to change the terms on their mortgage. And I will talk a little bit more about that in my next slides. Guarantor / third-party mortgages, of course, they're available if you've got one applicant wanting to own the property, but another one to take on the mortgage responsibility. That's fine. That can be done. That's usually quite useful with families. And what's very important to know is that when you're buying a property for investment purposes in the UK, the borrowing is actually not so much based on an income multiple or your kind of earned income. It's more to do with the rental income of the property itself. That's how they calculate the maximum. Different banks use a different calculation for that. So, of course, it's all dependent on each situation. Now, terms, rates, and fees. Once again, no need to mention that it really depends on each individual. Now, most buy-to-let interest rates vary between 2.5% to 4.5%. Buy-to-let means you're renting out the property, of course. The lower kind of 2.5% we're talking about very, either we're doing a, private bank kind of high net worth individual, higher loan amount. Or if that's not the case, then we're looking at 3.5% to 4%, which is quite standard. Anywhere between 3 to 4% is quite standard for a buy-to-let being based overseas. There's also residential mortgages, should you want to move to the UK or immediate families using the property as a main residence. But of course, there's different regulation on that and different calculations. So speak to me, I can explain how that works. Lender arrangement fee. So the bank will always charge some sort of an arrangement fee for setting up your loan. Cheapest one at the moment being around £2,000 as a flat fee that goes to the lender. Some lenders, of course, and most of them actually charge a percentage of the loan amount between 0.5 and 2%. The loan tenure, the loan term is actually not that restrictive. Most lenders, especially on a buy-to-let, can go up to the age of 85, 90 for clients. So not much to worry about there. And the biggest difference to Hong Kong maybe is the interest only aspect, which is available in the UK and is actually the most popular one. Interest only gives you a positive cash flow almost every time. And also the rate is still the same. Also, it actually gives you the flexibility to pay off some of your mortgage if you want to. So it's not just the interest only. There's no catch to it. It is just something that banks have introduced for buy-to-let investors, and it works really, really well. Right, when to remortgage. This is basically when you're moving your mortgage, your current loan, to another bank, or if you own a portfolio in fully cash, or you have a very large equity, you can take some of that money out. Usually you do that if your current initial rate with a bank expires. So your fixed rate expires and you actually just want to shop around for a better rate, nice and easy. Many lenders offer that. Or if you want to say you have a portfolio of £2 million in the UK and you wish to refinance that to take some money out. If your portfolio is 2 million and you have 1 million loan, that's healthy 50%. A lot of people will then potentially raise that to 70% loan and release 20%, which is £400,000 of cash, where you can buy your new unit at Wardian, for example, or put that down as a deposit. Super simple process, much easier to do that once you own properties already. If you want to change ownership structure, of course, change it, pass it on to family or spouse, you can do that nice and easy. That's when you remortgage, because the lender needs to underwrite the owner of the property. And a lot of lenders offer cheaper fees and incentives. So some of those fees were mentioned on the previous slide might be halved or completely waived if you are refinancing. So actually refinancing is much simpler and quicker than purchase. And we offer free consultation always, so we can review your current portfolio, your current situation, and suggest the best way forward. It's always the kind of cheapest way, really. The best way is the cheapest way. And yeah, moving on. We've got a few case studies for you. Really simple stuff, but it's worth noting just because of the difference with Hong Kong, of course. So I've got an employed HK national, so a person based in Hong Kong, from Hong Kong, income of around 600,000 Hong Kong dollars, which is about 55,000 pounds per annum. Had 2 existing buy-to-lets, and those buy-to-lets were in the UK. Now, they had almost no mortgage or very low mortgage on it, and thought, I want to buy another property. So we managed to remortgage both of these 2 properties up to 75%, which is the maximum. And then they released a significant sum to buy a new property, almost fully cash. So basically the rate was 3.24 and there was no lender fee. So this kind of product is super cheap. It kind of, you're leveraging against your current portfolio, and it was a very quick process. I think it took about a month and a half to get the money released from start to finish. We've got second part, we've got a director of a top 5 accountant firm in Hong Kong, large income, 100K plus. They had a mortgage on a buy-to-let in the UK through a Hong Kong bank. And because it was a Hong Kong bank, they don't offer interest-only option. They only offer capital repayment, so C+I, which means that the property actually wasn't profitable because they ended up paying more of a mortgage than they were receiving in rent, which ideally shouldn't happen. They went to a few banks in the UK, and because of different criteria, they were turned down directly. We managed to find a specialist investment back lender, so it's just a specialist buy-to-let lender with a very good interest rate. And the client started, once we refinanced, they were making £700 per month from that previously non-profitable property. So many options there to kind of make your portfolio do the most returns, really. And here we go, the Wardian. I've actually done quite a few mortgages there when it first completed. I've been to the property, looks amazing. It's always a bit easier to get a mortgage once the property is ready, because when the bank goes and does the survey and checks the property, it's there. They can see it. The pictures are real. Everything is real. They can see the unit itself. So good example is a purchase price, 895, quite standard. We got borrowing around 670, that's 75% borrowing, and we've got a 5-year fixed rate at 3.24. Similar to the one we just discussed, it's very important to do a fixed rate at the moment, and many people do it because if you fix, then any jumps in the Bank of England base rate will not affect you. And it looks like the Bank of England will put their rates up again. So most of my clients at the moment are going for a fixed rate, so they can sleep easy for the next 5 years. Monthly payments on interest only come to around £1,800. I think a property as such rents for about 2,800, so that's a healthy 1,000 buffer. which is always great. And the lender fee was only £2,000, so 1,999. Really, really good. And we've got the second option, slightly more expensive, very, very cool penthouse in Wardian. Borrowing was 70%. We had to go to a private bank because the client was high net worth. It's actually a bit cheaper, as you can see. It was approximately 2% rate. It's very much case by case. The lender fee is anywhere between 0.5 or 1% sometimes of the loan amount. And they may ask for some assets under management, which is basically stick some cash with them to invest. Sometimes not the case. And this is very good for high net worth individuals. So if you have assets anywhere in the world of more than £3 million, or income of more than 300,000 GBP, which is about 3 million Hong Kong dollars. Private banks are super flexible, and they see you as an individual client rather than have a rigid criteria. Cool. Moving on. And the application process. Now, as I said, we're on the same time zone. I can speak to you at any point you want for a one-to-one consultation, run through the details, explain everything in detail. What we can do once I have that information from you, and we have an idea of what kind of property you're looking for and which unit you're interested in, then we can get the approval in principle within a day to two, sometimes even quicker. That means I've spoken to the bank, I've given them the basics of your situation, and they've said, yes, we're happy to lend in principle. Once we have that, we can gather all the documentation from you. It doesn't have to be originals, can be scanned copies, and we can submit the full application to that particular bank. Now, part of the underwriting process is, of course, to underwrite you as a client, your income and your situation, but also the property itself. So the bank will survey the property, they will go in and say, yep, looks good, amenities look good, it's all absolutely fine. Most of these banks already have some information on Wardian because they would have probably lent there, they would have probably had done mortgages there, which makes the process a little bit easier for us. Generally speaking, the mortgage process depends on the lender, 6 to 8 weeks for the underwriting and full mortgage offer to be issued. And once the full mortgage offer is issued, then that lasts for about 3 to 6 months, depending on the bank, and you can complete at any point. So the whole process should take about 2 to 3 months from start to finish. Your solicitor will need a couple of weeks to draw down the funds and do the legal work. But from our side, we're here to guide you through the whole process and help you out. I appreciate a lot of you might be their first purchase. Others would be more seasoned and experienced landlords in the UK. However, it's always useful to explore your options. And yeah, thank you. Any questions, feel free to stick it down in the Q&A. I'll pass you back to Edith. Thank you very much.
Thank you very much, Marion. That was amazing, very informative. Okay, so because we have a little bit more time left before time is up, I just wanted to go through these Q&A questions that have come through. So the first one, is it advisable to furnish my buy-to-let investment, and how much? Okay, so typically yes, because London is a very transient city. Tenants don't like to bring with them furnishings because their job may change, their family may grow, they may want to progress to a bigger property, or maybe move to different parts of the city. So the answer is yes. For one bed, just to give you an idea, furnished by InStyle, our in-house company, it will start at about 4,295,000 plus VAT. And then the 2-bed will start around £5,295 plus VAT. And both of these are excluding the window dressings. So window dressings will be made to measure. So depending on how big the windows, if there's any balcony doors, and how many windows, then we will quote accordingly. So then the next question here, I think one for you, Mark. How quickly are properties getting rented in London?
Yeah, that's a good question, actually. So this is in my 26 years doing this in this market. I have never seen a busier market. Rental properties at the moment are super red hot. There is very, very little availability. And I talked about why, because There's a massive amount of people looking to rent, a lot of local people as well as students and international people coming in. So there is no stock and everything's renting. We're running on an average of about 2 working days at the moment. And we're seeing big rental increases on renewals, and we're seeing strong rentals, asking price rentals on new flats that we haven't let before.
Okay, great. Okay, third question for Marion. What is the maximum loan to value for a buy-to-let investment? And also, how realistically, how quickly can the approval be achieved?
So it really depends on the property type as well, but generally speaking, it's 75%, up to 75% of the value of the property. It can be done very quickly, actually. Within a month or so, you can have a full mortgage offer. And yeah, different banks have different speed, but of course, you know, it really depends on what the deadlines are, so we can pick the quickest bank depending on how much time we have.
Okay, great. Another one for you, actually. With equity release, is the interest rate portion deductible for tax purposes?
Now, that's actually a tax question, and I cannot give any tax advice because you know, I'm not qualified accountant or tax advisor. But generally speaking, the tax so it's no longer deductible off your tax bill in the end, the mortgage interest rate, if you're capital raising. No, that's not the case from what I know. But of course, please confirm that with a tax advisor.
Yes, please confirm with the tax advisor. Okay, so another one, I think we'll take this one as the final question, is the payment terms. So as the development is completed, the payment will be 10% on exchange, and then 90% will be on completion. Now, because they are completed, and you know, the developer have said, you know, there is a little bit of flexibility there, but that will be decided on a case-by-case basis. So yes, it's 10% and then 90%. Okay. So I think we can fit one more. Okay, the tenure of Wardian, sorry. So that is the leasehold. So the leasehold is 999 years. So virtually it's like a freehold. Yeah, so we wouldn't be looking to renew in our lifetime. So yeah, I think thank you very much for your attention. And this is what we have enough time for today. Any questions that are still outstanding, we will collate them and revert back to you individually.
Can I just mention one thing? If anybody's listening, we run a series of webinars throughout the year. We have a property roundtable one coming up where it's going to be myself with a tax expert, a mortgage advisor again, a political pundit, a head of the National Landlords Association, and a couple of other people. It's going to be on the 8th of June. Watch out for our website. I'm sure you'll get an email if you've subscribed today, but I would mention it because it's quite interesting. You can ask lots of questions, interesting, in-depth questions, which is always quite good. Anyway, I'm just mentioning it if anybody's interested. Thank you.
Thank you, Mark. So I just want to thank everyone that's attended, and also our presenters today. I want to thank Mark in the UK. I want to thank Marion. And yep, thank you also Equalder and Ballamore. Thanks.